All right, guys. What is Gucci Gang? What is good? What is good, man? Hopefully you guys had a good weekend. Hopefully you had a good weekend. I did. I definitely did. 27 viewers. Let's go, baby. Is way better than like 10. That is way better than 10. First stream was good. Just cashed NQ buys. Nice. I don't think we're done going higher, but we have been fast to go lower and very slow to go higher, so I could be wrong. But we got the highs we wanted. We're actually at a mitigation here too. We are revisiting again. But you know, taking partials or exiting trades is never a bad idea. Growing an account's never a bad idea. It only comes down to optimization at a certain point. You know, oh, could we have held on longer? You know, stuff like that. Which, again, I do think we will continue higher up to the 190s. Maybe the 200s. That's what I think. But, again, I could be wrong. I didn't say anything in the Discord about that. I only talked about those highs. Which, again, we'll get into more details here in a minute. But it was those two right there. Okay. You can hide on the 5 minute. You know what I mean? You can hide. But you can't hide from me. You know what I'm saying? You ain't gonna stay hidden. That is, it's not how this works. I will find you. If you are equal highs, I will find you. If you are equal lows, I will find you. Okay? There's no hiding from me. No, no, no. No, no, no. So, anyway, printed off some more weekend reflections. I wanted to go over this. Probably won't. Instead, right, the title of the stream is Back to the Basics. You guys good with that? Drop some ones if you guys want to go back to the basics. Not everybody has, you know, the advanced stuff. Not everybody knows the advanced stuff. Some people are a little bit intimidated by the advanced stuff, or they may not understand the advanced stuff because they want a little bit more of the basics. I told you those highs up here at 11:15, which is actually like right at this high, by the way. Then we got the dip and then the run up there, right? And that is based on the basics, right? Now, I'm not talking about my exes here, okay? Right? Dad humor or dry humor. We're talking about trading basics, okay? That's what we're talking about here. Those are the only basics we want to go back to, baby. You know what I'm saying? You know what I'm saying? I got one laugh. Okay, cool. Well, I won't be signing up for the comedy club anytime soon. So, nobody would get trading humor anyway. All right, let's do our intro, then we'll get into we'll go back to the basics, okay? What's good? Adam, Ebernith, Lawrence, Mason, Eric. I like the title too. Thanks. Thank you, thank you. What's good? Jorks, Torty in the discount end of the range, and Yapville look like swimwear NQ long. Oh, in there like swimwear. Man, I haven't heard that in a minute. What's good? Julius, Denelson, Patch, Marshall, Mark, Jordan, Les Savage. First stream, what's good, man? What is good? Elijah, Big James, 2020, Twins, 1, Tio. Who else did I miss? Did I miss anybody? Is the chat open today? Yeah, it's open for subs. Okay, cool. All right, so we'll go over 4 basics. We'll go over 4 principal ideas. Now, I am going to tell you, I'm going to warn you, though. I am going to warn you, chat. This is not new information. And this was in the 48 laws. Okay, so if you're expecting some brand new concept, some brand new inversion or timing tool or projection, quadrant, XYZ, we're not doing that. We are going to go back to the basics, refresh our understanding on what high probability trading is, how to spot high probability trades. Okay, I'm not checking out Nasdaq 100. Okay, I don't do CFDs. We do futures over here, and it's the same. Let me back up. It's going to have very, very similar price action. Won't be the same. It'll be very close though. And what you see on my chart, you will most likely see on the CFD chart as well. Okay. Now, the reason they're not the same is because the brokers, the data providers, they can do some shady stuff. They can add a wick there that wasn't there, you know, on the future side, but it's there on the CFD side. They can increase spreads to get you out. So even though you didn't get stopped out by price, you got stopped out by spread. Okay, if you trade CFDs, you know what I'm talking about. So, anyway. All right, number 1. Back to the basics, number 1. Price will seek 2 things. What are they? What are they, chat? Did y'all do that study on Friday, by the way? Y'all remember that distribution I told you to study to see if it would be reaccumulation? You guys did do that, right? Look at that shit. 150. Bang. Right up to those highs. Personally, I did think we would get equities high. Equities open high. I thought we would do that. But we only got to the equal highs like by a tick or two and then gave it all back. I was actually a little bit shocked about that. I was a little bit shocked. I thought we would actually get equities open. But those equal highs are enough. And that was perfect. Right? That's foresight, baby. That's foresight. That means before it happens. Right? So, anyway. What are the 2 things that price will seek? All right, a lot of you threw. I'm not going to read every single answer because there's a lot of you in here. But yes, those are the 2 things. Liquidity and inefficiency. An imbalance is an inefficiency. A gap is an inefficiency. Tio said, price seeks my TP. I love that. Not what I was looking for, but okay, 3 things. Liquidity, inefficiency, and TO's TP. Okay, so there you have it. Price will seek 3 things, okay? So, by understanding this, right, price will seek liquidity and inefficiency. That right there is the stepping stone to the 4 things that price does, right? We'll trade from liquidity to liquidity, liquidity to inefficiency, inefficiency to inefficiency, and inefficiency to liquidity, right? Those 4 ways, the 4 ways that price moves, okay? So that's what price is doing. It's either seeking liquidity, right? Or some sort of inefficiency. And in an ideal world, both at the same time. See that? So again, this is just an example because this is all from Friday. So that's just an example, easy example of an inefficiency. We have like 2 imbalances, right? You can take the first one, stop at the second one, aiming for those highs, right? So that's what price is doing. Here it's seeking inefficiency, and here it is seeking buy-side liquidity. Okay? So that right there, just having that alone is a good understanding of what price should do and what it should not do. You get me? Because next, I wrote this as number 3. I didn't really put this in order like I should have, but who cares? So we'll jump to number 3 as number 2. Number 2, targets versus stop loss placements. Now, this is where things get a little bit more difficult, and I've tried to simplify it for you as much as I could. So we'll break this down very simply. Okay? We're going to do this very simply. When you have price making a higher high, right, and you get that reversal, when price has taken out short-term liquidity, ideally, and higher time frame liquidity or a higher time frame inefficiency, that would work too, like a quadrant. Showed you that last week. We won't do that again here, but when you see something like that, okay, that's when you start to see stuff like the mitigation, Fernando. The mitigation, or, you know, some sort of imbalance to go lower. This is a set of high resistant highs. It's going to take a lot for price to get above that. And the inverse would be the same. So like a low and then a lower low that like rips higher. Okay? So these are very simple, very easy, and they're generic, but we'll get to some examples in a minute. But these are good for stop loss placements. Okay? So before I give it to you, why would something like this low, like let's say we wanted to buy a retracement and go higher, why would a stop loss here be logical? If we were going to short the market on the way up to go lower, why would a stop here be logical? What is the justification for that? What is the justification for that? I wouldn't say it's safe, but it is getting as close to as safe, as low risk as possible. You know what, Fernando? That is a good point. It may not necessarily be a turtle soup. If it is a turtle soup, though, this is even better. But that is a great point. Turtle soup's a little bit more advanced, but we'd have to add another low. Like if this was a low and then a lower low below an old low, yeah, that's a turtle soup, which is amazing. We love that. Or like an internal low. Some people think turtle soup's an internal low. I don't think that's correct, but it still works fine. It's just short-term manipulation. But again, that's out of the scope of today's discussion. Whether it's this formation or a turtle soup, why would if we're going to short, why would the stop at the high be fine? Or if we're going to long, why would a stop at that low be fine? Felix says liquidity already taken, trading after manipulation, because the market would have too much drawdown going against itself. I'm not really sure what that means here. That's where market maker orders are placed. They caught the high or low. So I don't know. I think you ended that a little bit weird, but that's fine. My biggest fear is trust. We don't trust these hoes either, Dennison, but moving on. When to sell the market. I feel more comfortable to buy the market than selling the market. What can I do to fix that problem? You know, that's a good question. I think it comes down to the market that you trade. If I were you, I would just go to the daily time frame and look at how many times the market closed lower versus it closing higher. Statistically, I think, and again, I could be totally wrong. I didn't verify this for myself, but I believe on a much larger scale, like if you have years of data for the indices, I want to say it's almost a 50-50% relationship between down close days and up close days It's just the difference is the up close days outperform the down close days. But again, I could be wrong. It could be 60-40. I don't know. But I would look at currencies the same way. And you're going to see there's opportunities for shorts and opportunities for longs. I would start there. Okay, so here's my answer, chat. The reason that something like this, that my stop would go there, is because if the liquidity has already been absorbed, right? That means anybody trying to long getting stopped out either at the low or a couple ticks below it, you know. All the orders don't go to just one price level, okay? That's not how it works. And there's always going to be market orders too that you can't see. So just keep that in mind too. All right. There's constantly going to be market orders entering and exiting the market. And pending orders don't go to just the low. They go beyond it as well. Okay. Or you're going to have sell stops, right? In the form of like, well, I'm not long or short, but I want to short below an old low. Okay. We don't do that. We don't want to short below an old low. So there's multiple price levels. Okay. If you don't believe me, that's fine. But I've been saying for years on ES, price will usually run 5, 10, 15 points below an old low. And yet it does that miraculously. So, you know, we're just permanently lucky here, I guess. But anyway, the point is there's going to be multiple price levels. Okay. Once that has been absorbed, it should not go down there again. Now, can it do that? Of course it can. Because we have, what? 1, 2, 3 formations. We have the Judas model. It's there. Okay? So it may not always work this way like you think. It's not that easy. This isn't TikTok. Okay? But when you ring in other ideas, right? Higher time frame concepts, time of day, day of week, stuff like that. Short and sweet. If the liquidity has been absorbed, the market's allowed to retrace, but it will not go to that low again. It won't do it. Not until it reaches something on a higher time frame. Okay? Or higher in the range. So that's why. That's what I believe. And Adam, that's what frames the low risk buy. If this was a big market maker model, and then we got the manipulation, that's where that comes from. The low risk buy is after manipulation. That's why the best trades are after manipulation. All of those extra things, those little nuances and those sayings, they all stem from the basics. Why did price do this, and why shouldn't it do that? Why should it go higher versus lower? Okay? And that's what I'm trying to teach you here. So when we go back to Friday and we look at it, and I told you, hey, we're going to do a study. I don't know what time I had said that. It might have been near the end of the stream. And I said, hey, do a study. I said, don't trade it, but do a study. See if that distribution becomes accumulation. And it's in the recording. It was on my story. I had those lines on here. I had the final hour delineated, right? And yet magically, after we got the reaccumulation, shift in the state of delivery, buying below the open of the hour, and price prints the Corvette candle straight up. Straight up, baby. Look at that. Like, bro, come on. And that's why. Now the low here, this to me was not, I don't look at that the same way that we did this drawing here, like a low and then a lower low like that. That would be basically putting it here. And I don't know, like that just looks a little bit muddy to me. But as I stated earlier, a few minutes ago, ideally you want to have a higher time frame concept or a higher time frame pool of liquidity, and that you do see here. You see what I'm saying? So by having Thursday's low, which I also gave you in advance to the public for free, but I won't keep bragging to you. Okay. We got a short-term pool of liquidity and a higher pool of liquidity met. We have already, based on the range from the pre-market, we had already, traded lower, retracement with the equal highs or low resistance highs, and then the consolidation, leaving it, trading lower, and then that tweet to go lower, right? So this is forming a market maker buy model, the law of the return. What was once bearish should become bullish. That's why I can tell you what's going to happen before it happens. The same way that you can do it too. You have the laws, you have the PDFs, you have the knowledge, bro. You know what I mean? You can do the same thing. Not that I want you to do this, but you can literally go up to your coworker and be like, hey, bro, it's the final hour. But we don't get off till 6 o'clock. Yeah, but it's the final hour of indices. Watch this. We're about to bust higher. We're about to print some Corvette candles higher. And then an hour later, come back and show them. See, told you. Look at that. And if you traded it, you can show them how much money you made too. Again, I don't recommend doing that, but that's the stuff I used to do because I was an a-hole, bigly. But same idea, okay? Where shouldn't we go? Why shouldn't we go there? Where should we go? And why should we go there? Okay? So number 2 is still targets and stop loss placements. Now these here are stop loss placements. That higher high to go lower, or that lower low to go higher. Those are stop loss placements. Targets, we talked about this in number 1. Where should price go? Liquidity or an inefficiency. So guess what? If we don't have any inefficiencies, did I say that right? If we don't have any inefficiencies, we don't have it. We don't have it. We don't have it. We have one right here, but that's on the lower end of the range, right? Which actually, law of the return became an inversion. Anyway, we don't have any sort of inefficiencies besides this one. So what in here would send price lower? Nothing. Nothing. There's nothing inherently bearish about any of that. So guess what? If there's no inefficiency, what is it going to go for? There's only one other thing it could go for. Besides, who was it? Besides TO's TP. If there's no inefficiency to reach, it's going to reach for liquidity. Bang. Look at that. We do this every week. How many times in the Discord, like today, do I have to tell you, hey, watch this, watch that. Bang, bang, boom. It goes where I want it to go. Okay? I'm not a puppet master, dude. I don't have my hand, up the ass of some puppet going, ooh, watch this. Right? With price action. That's not how it works. The reason we can do these things is because we are waiting patiently for high probability things. Okay? When we go to NQ today, right? Man, we haven't done anything in the last hour, which is good. I'm glad we didn't watch NQ because this has been cheeks as far as like expansion and retracement. It's just consolidation. That's fine. But watch this. When we go to NQ today, look at that. See that high and then a higher high to go lower? That's a good stop loss placement. Now, did we retrace higher anywhere in here to go lower? Not really. Equities is here. So our equities, we traded above equities open just enough for that and then lower. So we don't get any deep retracements on that. However, when we went lower and lower and lower, okay, those highs right there. When we get that in the middle of the range or near the middle of the range, okay, we'll do this. I'm not trying to pick a low, and I usually don't, okay? Like not the very, very low. I don't try to pick that like really far in advance. I don't try to do that. However, once we do establish some sort of consolidation or some sort of signatures, like, hey, we have this or that, shift in the state of delivery or, relative strength maybe. If we are going to trade higher, what would the easiest target be? It's going to be those highs. Okay. So as we're watching price, okay, we do consolidate in here. Now, a lot of people will look at that and I don't know what people think, but I know a lot of the time I used to get frustrated at stuff like that. Okay, I used to really despise this. But over time, hopefully we learn from our mistakes, right? Even though we don't get that formation that I showed you about, like the one that you guys already know, like the low and then the lower low to go higher, right? Something like that. Something like this. We don't get that here, and that's fine. What we do get, though, is all of those lows in here, right? All of those in there. The market trades below that, all of them, okay? Now, what you'll see on my charts often is not all of them, but just the lowest one, okay? Because why? They were selling at 10.25, 10.30. Oh, no. No. This would not be a good short. I mean, below those lows, I guess, but that's I wouldn't do that at all. I wouldn't do that at all. But what we do see here, and if you guys didn't know this, blue is a propulsion. I mean, sorry. We got a lot of concepts here. Blue is a suspension. My blue box is a suspension block. Okay, it's not mine. I didn't invent it. I didn't create it. We have a gap higher here. That candle closed. We have another gap higher here. So those two gaps together are included in this imbalance. So that is a propulsion. I mean, a suspension. Sorry. Right? So our suspension. Now you've already learned this. You've already learned what a suspension is, right? So look at that. Look where the bodies are stopping. The wicks, okay, they can do the wicks be wicking. Okay, they're allowed to do that. Right? See that? But all the bodies in here are staying in the upper half and they're respecting the midpoint of that suspension. So that, like, if it was me studying this on my own, I would look at that like, okay, maybe that is a buying opportunity, right? However, if we go out to a 5-minute, oh, look at that. We just got a little pop right there. Cool. Anyway, the suspension here is being respected on that smaller time frame, and that run to go, or it's a sweep rather, but this sweep here that are taking out these lows here, those two down candles together get traded through at 10.55, right? 55. Oh, what is that? What is that, baby? 10.55. That is the 11 o'clock macro. So 10.45 and then 10.50. So that 10.50 starts that 11 o'clock macro. We continue higher. There's your shift in a state of delivery on a 5-minute, because we already obviously had some things down on the 1-minute time frame. Once we have this, right now, it depends on the range that you're measuring when we talk about premium discount, right? Because let's say you have the days range as this, which I don't think is bad. It's a larger range, which is good. 25% is here. So that suspension was down there. This shift was above that, but it is still below 50%. So we trade down at 11 o'clock, right? Open of a new hour. We trade down and right into those two down candles right there as still part of the 11 o'clock macro. Then we had traded higher. That's why at 11:15 it was so easy to say, oh yeah, we're gunning for those highs here. Now you don't want to just buy it at 11:15. You don't just want to buy it on the way up. You want a retracement on the way lower. And we do end up trading back into that one more time. And then our continuation for those highs. You see how that works? Or if you wanted to take the range of the target, which is what I have taught you guys to do as one of your options, right there. Okay. And this is your range, where again, 50% is a little bit lower than the higher range, but we trade down into 50%. And you guys already know what 50% can do. If you are bullish, 50% is a discount. See that? Look at that. Let me just make sure the measurements are correct here. See that? Look at that. That's fair value right there. After price gave you evidence, actually a lot of evidence already to go for those highs. And the market gave one more opportunity to go higher. Now that second retracement here to me was not a surprise. This to me was a high resistant liquidity run. Okay. Look how long it took to go lower versus how long it took to go higher. I'm not going to delete everything because I still have alerts and stuff I have, but watch this. Those highs here and our low that was made, that's pretty quick, right? I mean, we can all agree that's like from 8:50 to 9:37. So about 40 minutes or so. But look how long it took to nail those highs. You see what I'm saying? That took a long time. When the market does that, right? Quick to go lower, right? Bulls take the stairs, bears jump out the window. The law of speed, I think it is. When the market does this and it sweeps and it consolidates and it gives multiple retracements, to me, that's a high resistant liquidity run. Meaning, you're going to have patience to sit through that. Okay? It's not fun. It's fun when price does this and it just prints the same directional candles that you want, right? That's fun. They say trading should be boring. On days like this, I can agree. I can agree that that's boring because it's giving you retracement after retracement after retracement after retracement and finally going to highs. I can agree. Yeah, that's a bit boring. But not every day, not every move is going to have low resistant runs on liquidity. So just to come back, right? Back to the basics. Number one, price will seek two things: liquidity and inefficiency. So if on a 1 minute, you're going to see a lot of this stuff, but if we don't have inefficiencies or the inefficiencies have already been traded through, okay, or utilized, there's nothing that's going to stop price from going lower. So it's going to seek liquidity. And that is the reason, okay, you've been here for the last 41 minutes. Jordan, at the beginning of the stream, right? What did I tell you? I said, I think we could continue higher. You didn't watch me mark this up. This stuff was marked up before we started. And that's why I think we could go higher. Because price is going to seek liquidity or inefficiency. And you guys have heard me say this all the time. How far can price go above a high or above highs? The next available like gap or imbalance. And that's what's up here. And that's why that alert is there. And that's why I told you I don't think we're ready to go lower. And that I think we'll continue higher. You see that? Okay. So number one, price will seek two things: liquidity and inefficiency. Number two, targets versus stop loss placement. This was also in the free beginner series, by the way. Okay. No, I don't think like everything's not in the 48 laws, but A lot of that stuff is there. And if it's not, we're going to have stuff in the beginner series as well. Hold on, I screwed that up. It's these are good stop loss placement ideas. Okay, but remember, these images are simple. I could draw them on a napkin. I could draw them on an index card and hand them to somebody and be like, hey, you know, go trade this. And they're going to get wrecked. Okay, they're going to get wrecked. It's simple, but you have to add other things, time especially, and context, meaning do we have anything on a higher time frame that supports this idea? Because stuff like this will not work on smaller time frames if it is against higher time frames. Okay, so although this stuff can be simple and relatively easy, it looks easy, but it's not. You have to have other things to go with this. But these are very, very good stop loss placements. And the other side to that is the targets. Okay, stuff like equal highs, right? Or low resistance highs, meaning the high on the right is slightly lower. You see that? So these are good stop loss placements. These are good targets. You get me? Drops. Did we do ones today already? Yeah, we did. Okay. Drop some twos if you guys are with me so far. 44 minutes into this. But drop some twos in the chat if you guys are with me. Price will see two things: liquidity and inefficiency. Number two, we have targets and stop loss placements. We want to target liquidity. We can target inefficiencies, especially if those inefficiencies, if you're long, just above a high, right? Or let's say a gap or an inefficiency below some lows. Those are good too. All right. Number three, which, I mean, we kind of did this already, but I'll go over it a little bit more specifically. Which was law number one, right? The 48 laws of trading, law number one, buy low, sell high. So in the most basic sense, if you're not going to do quadrants on the concepts, if you're not going to do quadrants or anything like that on, let's say, Sunday's gap or higher time frame concepts or anything like that, at a minimum, bro, at least do the range that you're working with, okay? Meaning, if we're working within a range at 11 o'clock, at least on electronic hours or regular trading hours, just look at your most recent low and your most recent high and just kind of know where you're at in the range. So automatically, automatically 50% is there, right? 26,140 rounding down. So when we're below that range, after the low's been set, this is all discount, 50% and below. Now, 25% is discount of the, we're going to borrow this, is the discount of the discount. Okay. This is where your low risk, high reward setups are going to be at. This is where your low risk buys are going to be at. This is where hear me out here. This is where traders will get stopped out at break even before it goes their direction. Okay. There's a reason I raised my voice a little bit. Drop some threes in the chat. We do this all the time. Drop some threes in the chat if you've ever been stopped out at break even just for the market to go your original direction. Drop some threes. I'm going to drop a three myself. I've been doing this a long time. Okay. It's happened to me too. All right. Right around 25% at the beginning of a move. That's where this stuff can occur. Now, before the final move, however, we don't have that here, but if this whole thing were a buy model, then the 75 to 50% is where traders get stopped out before the final move. Okay. But when we talk about discount and premium, or premium and discount, the 25% level here is where a lot of traders will get cooked. They'll be right in the direction or the bias, let's say. They'll be right in those things, but they'll either take a small loss or they'll take a break even on that day of expansion. So this is why sometimes if you're going to buy below lows or buy right after that, that manipulation here, that right there can be a good stop loss placement. Okay. Those down candles here, then we get that shift in the state of delivery. That I believe is what T-Trades and others will consider a protected low. Okay. Your stop could go down here too, but listen, if you're trading something like this, right? And your TP is here and your stop loss is here, like you're basically taking a 1-to-1. You're basically taking a 1-to-1. I'm not going to say don't ever take a 1-to-1, but I will tell you, I would not do that consistently. You really want to frame something that's 1-to-2 or better. But well, I mean, Ricky, I'm not going to go over like every concept or idea behind stop loss placement, because there is like time-based stops, there's concept-based stops and stuff like that. But I think the issue is with stop loss placements is either it's either going to be too small of a stop loss, meaning it's too close to the marketplace, or and people do that either because they want to be like super precise or they want a really high RR, which I don't think beginner traders should chase that at all. If it's not too small of a stop loss, it may be too wide of a stop loss, or hell, not even a stop loss at all. I think that's crazy. And I think when people place their stop, it could be also based off of money too. You might, this is just hypothetical here, but let's say you longed these down candles, right? And then you put your stop it at this low, but then you go, well, I like the trade, but 50 points of risk. I think that's 50. I can't really do math that quick, but let's just say that's 50 points. Oh, well, that's $1,000 or, whatever. That's too much money. So they have to like, tighten their stop loss a little bit based off of the money or the percentage. I don't think that's good either. You know what I mean? If NQ is too much, go down to micros, But anyway, the point is, we were on number 3, right? Buy low, sell high. Upper 50% is premium. Lower 50% is discount. And obviously the 25% is going to be discount of the discount, and 75 is going to be premium of the premium. So 50% and lower is ideal for longs or add-on, and above 50% is good for TPs, right? So watch this. I meant to say this earlier. These highs right here as a target, where are they in the range? If 50% is here at 26,140, 156 is where? It's above that. It's high. It's in a premium. So this is a good partial. I mean, you could cut the entire trade there if you wanted to, but that's the point, right? When it comes to these ranges, is you want to buy low, right? Anything in here is buying low. Anything in here, it is a little bit higher, right? But it is still, by definition of the range, it is still buying low. It's still buying in a discount. And those highs are the first target in a premium. It's the first target above 50%. And so that's why I'm saying that high plus like 1 point or 1 or 2 ticks, that right there is good. Okay. And that's, I don't know what we base this off of, but like that low is about a 1 to 1.5. Not great. If you were aiming for that 5-minute imbalance, which at this point, I don't know if we're going to get that or not, but if you were, that's a 1 to 2. And that's still not bad. Second AM macro also. Well, yeah. Okay. The number 4, I really didn't want to go over. The problem is because we don't really have that here. We really don't have that here. But I would say number 4, one of the basics is yeah, today's probably not the best day for this explanation, but if we'll do it anyway, who cares? Number 4, I'm going to say AMD. I'm going to say AMD. 5 points risk. ES, it is way easier to trade ES with a 5-point stop than it is NQ. For obvious reasons. But the ES market today, and this is why I liked NQ over ES, not because of like the way we made the low, it was really because of the target, right? When I look at this range here, just like we did on NQ, like ES did not have the highs. It didn't have equal highs or low resistant highs. It just has a distinctive high here. You see what I'm saying? And that's why I do that. Sometimes you'll hear me talk about NQ. Sometimes you hear me talk about ES. Once in a blue moon, I'll talk about Dow Jones or some currencies here and there, because what I'm looking for is a really, really nice target. And again, it's just, it's personal interpretation. I looked at ES. I just didn't care for the upside that it had. You know what I mean? I like the imbalance up here. We don't want to have wicks on some of these candles. I like that as like an inefficiency target. But otherwise, I really didn't care for it. But something like this inversion or that imbalance here, you could easily do a 5-point risk on that, or something like in here. Yeah, especially like that. Like those down, the same, maybe not the same as NQ time-wise, but those down candles here being traded through, and that short-term low got taken here, like those candles here do support price. So, you know, stuff like this isn't bad as a low-risk buy. But I wasn't watching ES the same way I was watching NQ. So, damn it, Fernando. You don't write anything down. See, this is why I tell you guys you don't write anything down. But I will. I will. Well, let me go over number 4 first. So, number 4 is, I have a video on this. I think that video is going to do a lot better help here than what I can do off the top of my head. But AMD is basically, let me go back to ES because I want to take everything off here. I lied. I'm going to keep that up. So AMD is basically the next candle entry, but on a higher time frame. So what you're doing here is you're either referencing a lower time frame candle, but ideally the higher time frame candle, like the higher time frame you go, the better, in my opinion, for stuff like this. Okay, we'll just leave it like that. So what I'm saying is, if you anticipate a bullish day based on whatever, okay, based on higher time frame criteria, yada yada yada, we got at least one person that writes things down. Thank you, Ricky. We appreciate that. To be fair, dude, I've never seen a wall more dedicated to trading than Ricky. Like, I don't, like, chat, I don't know if you, we got like 60 people here. I don't know if you guys have seen Ricky's wall. It's probably multiple walls now that I think about it. But like, bro, there's like so much trading stuff on there. It's crazy. He like eats, sleeps, and breathes trading. So I'm glad at least we have one person here taking notes. So that's wonderful. What I was saying is open, low, high, close, right? So on an intraday, and you've seen this image before, on an intraday, if you're anticipating an up move, that means we're going to have the open, right? We're going to trade lower, then, right, some sort of higher, and then close. You see what I'm saying? It looks, I tried to make it like perfect, but y'all see what I'm talking about, right? The open, we may consolidate or whatever, and then have that initial move lower. But on a day you anticipate higher pricing, right? That you're going to have that expansion, and then it might fade off into the close like it usually does. Yeah. Don't worry, bro. You're not the only one that has tried to make plans and plans fall through. That's okay. But this is my point, okay? Higher time frame, AMD, or some people say Power 3. I really don't care what you call it, as long as you understand the idea behind it. This is what I'm talking about. He said trading idolatry. Yo, that's insane. I've never heard that before. That's going to make a good title one day. He said trading idolatry. That's, wow. I'm genuinely shocked. That's actually kind of funny. But this is the same idea. Okay? Open, low, high, close, and this is either going to be a higher time frame like than what you're on, let's say an hourly time frame. That's why I showed you 11 o'clock. If 11 o'clock, we can anticipate, well, it's lunch, but for me, but if we anticipate higher pricing, if we anticipate expansion, then I want to long at the open or a little bit below it. Now, if that's already happened, say I got to use the bathroom, or I don't know, you know, people got stuff to do, you know what I mean? And you come back and it's already above its open, you can still get in a little bit later. But beyond a certain point, once you are in a premium, I would say you can still long in a premium. However, you just really have to be careful. If you don't time the entry well, you're going to take drawdown. If you don't time the entry well, your RR is not going to be great. Okay? And it does, a lot of the times, I would say, feel like chasing a move. It's not always chasing, but I would say, you know, the later you get in, just the more careful you got to be. And if need be, just wait for another trading day. Okay? If you're trying to long at 75%, you might as well just let that move pan out without you and come back another day. Okay? It's still tradable, but you know, I'll leave that up for the individual to decide. But here's all four that we went over today. Okay, back to the basics, baby. Y'all ready to wrap this up? Back to the basics. Number one, price will seek two things. Hopefully not our stop loss, right? Price will seek two things: liquidity and inefficiency. Those two things, liquidity and inefficiency. It's going to trade to one of those two things. If you don't know what it's going to trade for, you don't have a high probability trade on your hands. Okay? Number two, I did this out of order. Number two was the targets versus the stop loss placement, right? We want to place stops. The widest stops, I would say, are going to be at the manipulation lows. There's ways to tighten that stop, but just to keep it basic, we want to know where price is going and also where it's not going to go. This is how we frame high probability trades. It shouldn't go down here because of this. It should go up here because of that. The same way, well, we may not trade higher here, but the same way here earlier, that's what I tried to explain to you. We had manipulation. then a shift in the state delivery. Okay, we shouldn't go to that low. We should go to those highs instead. So the next retracement, that could be a long to go there. You see what I'm saying? Now be mindful though, if this does end up being a down day, you are longing in a down day, which is not ideal. But still, the point remains, stop loss placements and targets. Okay, that's how we frame a one-sided market. All right. Number 3, buy low, sell high. It's 48 laws, number 1, but buy low, sell high. Upper 50% is premium. That's ideal for targets and TPs. The 50% and lower, ideally 25% and lower, that's where we want to be longing. Or if we're short, we want to be taking partials or profits in the lower end of the range. Okay. And then number 4 was the AMD. That was the image I shared just a minute ago, which is something like this, either for a day or for a session, or let's say for an hourly candle. Okay. You guys know how I come on here sometimes and I'm like, hey, I'm bullish for the PM session, or I'm bearish for the PM session, if I actually do have a bias. And this is what I'm referring to. The open of that session or that hour, especially the final hour, that open is going to be important. Okay. With those basics, because again, trading gets a lot more advanced than that. Obviously, we didn't even talk about time windows today. Not all that much. Okay. Well, just the time that we met the equal highs, which was at 11:51. But outside of that, by knowing the basics, by having these things, where price will go, where the ideal longs and shorts are going to be at, and where to place your stop loss, those are good basics to build from. Okay. Remember, these are just first principles. These are building blocks. This is like the foundation under your house. You get me? It's a wonderful foundation, but you're still going to need walls and windows and AC and all that stuff. AMD stands for accumulation, manipulation, distribution. Accumulation, manipulation, distribution. And that's why I said, like, today's really not a good example of that. But ES on Friday sort of was. If you look at 12, because 12, again, is the way that I look at the PM session start. Some people think it's 12:30. If you want to use 12:30, hey, be my guest. Okay? I'm not going to tell you what to do or what not to do. I just present you with information. What you do with it is up to you. But this is what I look at. 12, right? It's not really accumulation here, but if we do have a consolidation, that's fine. But remember, we had a consolidation below an old low. So this is really more so manipulation. So it's the open lower to go higher. That's why we talk about that. The markets go lower to go higher, or they go higher to go lower. You have to look at opening prices. You have to, especially the session open. Equities open, PM session open, final hour open, MOC open. Okay? So I mean, I wouldn't say this is accumulation, but if it was, it'd be accumulation, right? Manipulation, distribution. Wow, I got to stop drawing circles because I have the humor of like an 8-year-old. Can't draw circles in front of people. Accumulation, manipulation, distribution. So the distribution phase, that's where you want to hold your trades. Manipulation is where you get knocked out, or it's where other people get knocked out and you want to get in right after that. Okay. And again, it's phases of price. British pound was a good example of AMD today. I didn't really look at currency. I didn't bother with currencies today. I briefly looked at them for like 3 seconds and then I said, nah, I'm good. But those are the things. All right. Number 4 is AMD, accumulation, manipulation, distribution, which in other words is just the open, high, low, close. of a higher time frame concept. So like this session here, look at it. Yeah, I'll just take everything off. 12, the open is right there. The low is right here. The high is right here. And if we do the close of 3 o'clock, it's going to be here, right? So then the candle, that's basically what it would look like that. Open, low, high, close. So it's that expansion. Make sense? So that's how you time expansion moves. After manipulation, on the way to, I'm going to go back to 1 minute. What was I saying? Distribution, right? On the way to equal highs. That's what we want to be trading. You can trade down here, don't get me wrong. But if you're not in from down there, you at least need to understand where price is going, where it's not going to go. And then you can take good directional bias trades. All right? Need not the sniper entry. Sniper entries are great. I'm not going to argue that. I'm not going to argue buying down here, or even like down here, for example, wasn't prime. Yeah, those are great trades. But again, everyone can't be in front of the charts all day, every day. Some people have work, or some people, you know, they got stuff to do, right? But at least knowing how the low was set, or how the internal range lows down here was set. Oh, intermediate term low, by the way, right? A low here. Where'd my mouse go, Chad? Bruh. There we go. We had a low, and then a higher low to the right, and a higher low to the left. Intermediate term low. Boom. See that? Now, that's not part of the basics, but anyway, that's going to be it, okay? I'll say this one more time in case you missed it. Number one, price will seek two things: liquidity and inefficiency. Number two, targets versus stop loss placement. Turtle soup, great stop loss. You know, previous day low or previous day high getting taken out, something like that, that's a good stop loss placement. Equal highs, equal lows, those are good targets. Low resistant highs, low resistant lows, those are good targets, okay? Number three, buy low, sell high. Upper 50% is a premium, lower 50% is a discount. You can use the quadrants as well to help aid in that measurement. Number four is AMD, which we just went over. Accumulation, manipulation, distribution of a weekly, of a daily. You probably don't want to go below like an hourly, but it could be the session as well. Okay. And every candle is going to do that. Every candle isn't manipulation, but it's the pattern for the pattern's sake. We'll do one more thing real quick. Okay. And then we'll hop off, because I really need to put this in here. I just want to give you one more example before we hop off. I could be here all day, every day, and I just want to throw so much information at you. I don't know why I'm this way, but there's just so much good stuff that you guys have to know. You know what I mean? Like, you have to know this stuff. Okay. The only difference between 8 to 9 is that 8:30 is equities open. So I won't cover that. But look at every other hour. Right? Mark up the open of every hour. You see that? Accumulation, manipulation, distribution. This is shady, but we do trade below the open to expand higher. Right? And then, like I showed you earlier, 11 o'clock trades down that 5-minute shift in the state of delivery. Accumulation, manipulation, distribution. Okay? The PM, Adam, the PM session, the way that I look at it, is 12 Central. 12. Some people like to use 12:30. So whether you like 12 or 12:30, it's up to you. I've always liked the 12 p.m. time. 11 to 12 to me is lunch. But some people prefer 12:30. Like, say here, for example. Open, higher to go lower. So every hour has like the AMD pattern, if you will, or the PO3 pattern. It's just a repeating phenomenon. But that phenomenon here is what I'm telling you. I used to call it the micro fluctuations. Those are the good entries, right? Macro time trading lower, you're buying on the way down in a market that is bullish. And you're exiting higher, right? You're exiting on the way up. You're buying low and selling high. Okay? So again, these are just basics. The models and the advanced details, they build on the first principles. Without first principles, without the basics, you're going to be missing pieces of information. You know what I mean? And by not having some crucial information, you're not going to make the most informed decisions. If you can't make the most informed decisions, then you're not going to take good trades. Or you might take good trades here and there, but you're going to take a lot of bad trades too. And that's half the time, that's one of the quickest ways to profitability. It's not that you take it's not that you don't take good trades. I think a lot of people take good trades. They just take too many bad trades in between. I mean, am I wrong, chat? Drop some 4s if I'm on to something here. Drop some 4s if you've experienced that before. Well, yeah, John, I take good trades, but I take bad trades too, man. And my bad trades just seem to really, really just, man, I give it all back on the losers. Right. So what? Think about this. Okay, let's put on our thinking cap for a second. What would happen as a byproduct of losing less trades? Well, it doesn't take a math genius to understand that. If you took less losing trades, and if you kept those losses to a minimum, and you let those winners run, or if at least you take more decent trades, you don't need bangers, you don't need home runs, but if you just take some base hits, like in here, right? Shifting the state of delivery up to those equal highs. Like that's a base hit. Today kind of sucks overall. I mean, today looks kind of weak, right? So it's kind of a counter trend, but it's still a decent trade. And by taking decent trades and eliminating the bad trades, what do you think is a byproduct? Less is more, as they say. Yeah. You could take, I'll end with this because I know we're going overboard here, but watch this. You could take one trade, even something like this, right? Even if it's on the micros, and you could take one base hit and you could do better in a week than the person that traded every single day. They took 5 to 10 trades a day, some wins, some losses, some break even, some revenge trading, some this, some that, right? And they could have a break-even week or a slightly profitable week. And that one trade that you took could outdo that entire other person who spent a lot more time and energy, who took a lot more trades. Because it's just simply less can be more. But that less amount of trading has to be good trades. It can't just be, well, I take a less number of trades, but you could take a less number of trades and those trades can still be kind of mediocre though. You see what I'm saying? What's the point of that? I think a lot of people, okay, I'll end it with this for real this time. I'll end it with this. I think people spend so much time and energy trying to find better trades when they're already a decent trader. They just need to eliminate the bad habits and the bad trades. Think about this. If you can make 1,000, but you lose 1,000, all you have to do is keep making that 1,000, but start losing 500 instead. You see what I'm saying? And the byproduct of that is you're going to be up 500 for that week. You see what I'm saying? So sometimes it's not about finding more setups, finding better trades. There is room for that, yes. But don't ignore the other side of that, right? Mental model, inversion. Think about the other side. Just try to eliminate the bad trades. Break evens, I wouldn't really be too worried about. But if you're taking like big losses, yeah, I would focus on that and find a way to eliminate that. So with that, that's going to be a wrap for Back to the Basics. Okay. Hopefully you guys got some value. Hopefully you guys, you know, study this stuff, man. It's not always about market maker models and pyramids and sniper entries and all that stuff. Don't get me wrong. I love that. That's what I market. I love those sniper entries, baby. I'll market that all day. You know what I mean? But I also know that trying to get sniper entries on every single trade is that bar is insanely high. That's an insane bar. Okay. And I wouldn't tell you to reach for it. I'm not saying reach for that. You should only take sniper entries. Yeah, no. It's okay to take drawdown, bro. Being on the right side of the market is more important than the sniper entry, in my opinion. I'd rather take a trade with drawdown that goes my direction than to snipe the wrong market. Oh, you got a sniper entry? Yeah, but then it came back and then the market went the other way. You sniped the wrong direction. What good is that? I'd rather be drawdown in the right direction. This last tangent, speaking of my troubles, today was the first day back and locked in profit. See you tomorrow. Have a good one, Jordan. All right, y'all be good. Be blessed. I guess we're not going to reach. I guess that's our breakaway. I guess we're not going to reach for that. But you can at least see why I said that, though. Because that's what price does. Seeks liquidity and inefficiency. Doesn't always hit what we want. Doesn't have to. But good trades are still good trades. So we'll be here same time, same place, same price tomorrow.